What's up, YouTube? It's your boy JB. We don't save, we invest. We're going to talk about 3 different stocks today. Zoom, they got earnings on the 30th. We're going to talk about Dropbox, one that Wall Street hasn't caught the attention of Wall Street yet, but has great potential. And we're going to talk about DraftKings, ticker symbol DKNG. I hope you all have a happy Thanksgiving. Now it's Black Friday. Now it's time to go shopping. But let's go shop for some stocks. Let's get into it. They're currently sitting at $19.75 on the 27th. They closed at $19.03 on the 5th. They closed at $20. Now, Dropbox has been consistent. A lot of consolidation, which is called sideways trading going on, in the $18 range. We know there's some support at the $18.40 range. There's some resistance at the $20 range, but this company has great potential. Now, I put a call option in for January 2023 for a $20 call. Yeah, that's 2 years plus, but I think this can go to $45 easy by 2023. This stock is undervalued right now. It hasn't caught Wall Street's eye. Operated by American Dropbox out of California. It beat earnings in Q2 and Q3. It's an enterprise communication system that will drive this stock past COVID-19, past 2020 and beyond. This will be around for a while. There's institutions utilizing Dropbox, colleges that find it more accessible for students. They're collaborating easier. So this has so much positive upside that more people will buy the Dropbox platform and use it, which will up the share price and revenue and growth, and it will catch Wall Street's eye, and then it will pop. Now, Dropbox is convenient for students. It's more engaging and easier to use. So many Wall Street analysts are bullish for the short term. I'm bullish for the long term. Once again, it's a tech stock, and it's a good one. It's a cloud-based stock. I advise you guys to look into it, do some research. I'm not a financial advisor, but I can provide financial education, and it's a good company to invest in. Dropbox is striving to enhance its platform to aid users to access, store, synchronize, and share files. Zacks ranks number 2 company. Propensity towards web-based learning has led to higher utilization of Dropbox paper among higher education institutions and universities. Professors are finding it convenient to use Dropbox. So many professors are liking what Dropbox has to offer. So you know what that means. If this comes into the higher educational learning realm, this can end up being here for decades to come. It's a great stock, great company, has great numbers. The market cap can expand huge. They're beating earnings reports, which is all good signs. It's all good signs. Now, the next company we're going to talk about is Zoom, ticker symbol ZM. Ticker symbol ZM is currently sitting at $458.79. It's up 3.4% today and up 15 points. Now, Zoom, we know, it's probably been the best COVID stock since inception of COVID. Zoom is up over 300% since March. Their Q3 earnings is November 30th, so that is Monday. Watch for it, guys. That's why the stock is shooting up today. It's going up. And I think do I think it'll beat Q2 earnings? I don't know. That was amazing. But I know it'll still have successful results because everybody's utilizing Zoom. This is a worldwide company that's being used, and more users are buying this. So it has great potential to stay here beyond Corona. Schools, businesses, jobs, its user conference. It doubled after Q2 earnings. It's a work from home strategy for work and users, and also another strategy for social users for video conference parties and workout platform and workout meetings. So it's pretty useful. It has tremendous upside, tremendous expansion. Also can be here for the long haul, because if schools want to implement Zoom for children who become sick, now we know in this nation alone, a lot of kids get sick during certain seasons, but if Zoom is incorporated into this everyday school systems, Kids that are sick can do their schoolwork from home. They can learn from home. And we know how important that is for our kids and for higher education. It's a great company to invest in. Great company. Long-term potential, amazing upside. And I still think that this stock is still good to be bought at this price right now. So we see in October 27th the close was $489. It reached up to $525. Now on 11/4, Zoom closed at $483. Let's go back 3 months. Now look at this. On the 20th, Zoom's closed at $575. Guys, it's still $117 cheaper today than what it was on the 20th. So it has potential to go back to its high, which I believe was in the 580s, I believe, and beyond. Yeah, 588. So on October 19th. So it has great potential, great upside. This is a great company with expansion, with more people understanding this is a stock to stay just for a pandemic. This is a stock that will be amazing for users, for the world. Just a great company. It saves time and it's amazing. So Zoom not only has great potential, but also they have some good things, that video conferencing. Zoom Video is riding on momentum and number of subscribers and expanding enterprise customer base amid the coronavirus. The company is leaving no stone unturned to enhance video conferencing experience, as evident from the development of hardware as a service model. Now, if we scroll down here, besides efforts to eliminate the security and privacy loopholes, Zoom from Home Solutions launch are expected to help maintain its existing enterprise user base and attract more customers. The company had 988 customers with more than 100 and trailing 12-month revenues, up 112% year over year. This company is great, guys. It's time to invest. Don't forget, we don't save, we invest. You're not going to make money by sitting at home and just chilling and not investing your money. Leaving your money in the bank ain't going to make you money, especially with the rates that has dropped since COVID. It's time to invest. Start putting that money into the stock market. It's a great way to make money. Now, the next stock we're going to talk about is DraftKings, ticker symbol DKNG. If we take a look at the DraftKings chart, DraftKings, as we know, is sports betting. It deals with the casinos and the online gambling and things of that nature. So once we know that the legalization of sports betting will take place, more states will allow this, so it will grow in more states. More states will become big on sports betting because it will bring more revenue to each state, which will bring more revenue to DraftKings, and it will push the share price higher. My target share price for DraftKings in a year is $100. I think this stock is currently at a good steal. It's cheap right now, and it's the king of the betting and online. We know there's Lancadia Holdings, which is going to pop and double soon. DraftKings will easily go to $100. Now, DraftKings, I believe the high was $64, and it's currently sitting at, right now, about $52.73. So DraftKings will easily give you a quick $12 because its high is $64. It's definitely going to surpass that without a question, without a doubt. Now, the legalization of the online betting and online games will allow more people to stay home and still gamble and still bet online. So it's convenient for the user. It's convenient for the hotels, because not only will people go to hotels and gamble, but they also have online, which could double revenues and double money being brought into the business. And the more states that do it, the more that these companies will make more money. And it's good for us shareholders who have strong faith that this stock and these companies we invest in will make us a lot of money. And it will. So DraftKings, if we go back to the chart, 6 months ago, June, it was $40. We see it went down, it went back up. Huge sell-off, came up, down, sideways trading, and it popped. You see this? It traded sideways, and it shot all the way up into the 50s. That's amazing. Then it went down a little sell off because people were taking profits, and it shot back up to $64.10. And then that was early October 2nd. Now then it had a huge sell off from October 2nd to November 3rd, and it got down to $35.62. That's when I bought it. That was a great time to buy in and make easy money for the long term, because now we know it hit the $64, which is its resistance. It don't have to retest that level again, and it shot down to 35. So we know it's $29 roughly profit that you would make on each share when it hits back at $64 a share, and it's already up into the $50 now. So you already would have made $17 profit on each share that you own. So we know the great potential that DraftKings has. We know that it's going to be big. It's big business. It's the king. We got NBA season coming. We're currently in the NFL season. Then we got more sports seasons coming that people like to bet on. So it's a great time to invest in this company, guys. DraftKings. So I'm going to conclude for today. We talked about Zoom, Dropbox, and DraftKings. 3 great stocks to invest in. Keep your eye on Zoom. Monday is the earnings. Don't forget, we don't save, we invest. It's your boy JB. Subscribe to the channel. Help out. We all family. Let's grow. Let's make money. And let's do it. We in it to win it. It's JB. Take care, guys. I'm out.